Welcome back to the ticker here on Yahoo Finance. Retail sales taking a dive in the month of April, falling more than 16% as the lockdown led to a record drop in those sales. For more on this, I want to bring in Jerry Storch of Storch Advisors. He's also the former CEO of Toys R Us and HBC. And Jerry, thanks so much for taking the time to join the show again. Let's talk about this number that we got this morning. You said April retail sales were going to be horrible. We saw that more than 16% drop in the month of April. I guess my big question to you is, did you think it was going to be this bad?
Actually, I did. Keep in mind that April was the first month when we had the shelter-in-place orders or the stay-at-home orders in place for the entire month. And also consumers were scared to go out. So that's what happens when you close the stores. You don't get sales. And there's no way the internet sales can make up for it. So you might be more surprised that there were still 84% of the sales that did happen. You know, that there was still that much activity taking place given the environment that we're in.
And talking about the sales that were taking place, a lot of that had to do with the jump in e-commerce. From recent Adobe report showed that e-commerce sales jumped by almost 50%. When we take a look at that, I guess, what names do you think are best positioned in this space? And also, is the coronavirus kind of triggering or accelerating some of the changes and trends that we were already seeing before the outbreak?
Sure. Well, look, this was all happening before, as you allude to. The internet was growing rapidly and taking share. Mall-based retailers were losing. Department stores were losing badly. Apparel was losing to hard lines, and the mass merchants were winning. What this has done is accelerate all those trends. So this is the first month, when you look at the report, when e-commerce sales exceeded 20% of retail sales. So that's a phenomenal growth. It's been down to kind of 11, 12% for some time. And of course, growing very rapidly, picking up a point or two a year, but it picked up a huge amount during this period. Other big winners are the mass merchants like Walmart and Target, Costco, who sell both necessities as well as everything, but they were open. And so they also have good internet arms. I would say if you don't shop Amazon.com, you shop Walmart.com. So yeah. That's the number two. So they certainly grew a lot during this period. I think Dollar General is another important name to follow because on the value side, they are kind of the Walmart in many small communities around the country, and they did great in this environment. I think they're going to continue to do great as well. The mall-based apparel stores and department stores, they're in big trouble. Apparel, I think the biggest number here was the glaring 89% reduction year over year in apparel sales. So those did not hold up in any way, shape, or form. And basically, we're not going anywhere. We don't need to get dressed up for it. And that's what we saw there.
Yeah, Jerry, I think that is the line of thinking of a lot of Americans these days. I want to talk about some of the retailers that are struggling, to say the least, and specifically focus on those bankruptcies, the reports that we got this week. So first we had J.Crew filed for bankruptcy, then Neiman Marcus today reports that JCPenney is exploring bankruptcy. I guess my question to you is this a trend that you will think will continue within the sector? And what are some of the names that you think are on the brink of bankruptcy at this point?
Well, I think it is going to continue. And, JCPenney, everyone knows, is just sort of tottering right there, teetering. They've made an interest payment today, so I guess it's not happening right away, but it's going to happen soon. Everyone knows that. They're not going to be able to, they're just negotiating to get a better deal for when they go into bankruptcy. I think Seana is in big trouble and won't be able to make it through this. I think there'll be many more as we look to the future. With Neiman Marcus, with that Chapter 11, I think it's very likely they're going to end up finally married to Saks. You know, they've been star-crossed lovers for years, and there's really not room in the country for both of them. And so that would be a rationalizing outcome that seems quite possible for the first time in a long time in this environment. So.
Jerry, do you have confidence that the retail economy is going to come back strong? And what do you think the timeline is for the potential rebound?
Well, you can look at a couple ways. First of all, I think it's going to lead us back. I think it's going to drive us back. But as people start to creep out of their holes in their shells and head out into the malls, everyone's going to watch very carefully what happens with infection rates and deaths, and it's terrible things to talk about. But we're going to watch it very carefully. And if they're kind of okay, then I think more people will come out. And we'll see more of a reopening of the economy. If they start to spike again, people are going to go right back in, and it's going to take longer. I don't think we're really going to get back to where we were until the fall of next year. It'd be quite a while. But it doesn't mean that we can't do a lot better than what we saw in April.
All right, Jerry Storch of Storch Advisors, also former CEO of Toys R Us and HBC. We love having you on the show. Thanks so much for taking the time.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.